Hey guys, Bill Soriano here from Pittsburgh. It's Friday evening about 7:46 p.m. Eastern Standard Time, March 28th, 2025. This is the weekly recap for the week of March 24th. So I'm going to show you the three trades that I was able to take this week. Again, we're trading from the 4 hour supply and demand zones. Once those zones are hit, we're dropping down to the 1 hour to take the trades, right? Wait for a market structure shift, which could be a buy or sell shift or a change of character. And then we identify with our fib retracement tool, right? 61.8 to 71, or if it was a change of character, the refined 1 hour zone that we want to trade from. All this is in the video that I have for you guys. So if you haven't watched that video, on trading the 4 hour supply and demand zones, to make sure you get with me because you'll be a little bit confused here. I'm going to put the link to the video in the description area of this video as well. So this is NZD CAD. So let me just show you real quickly. I want to show you this is a demo account, guys. We're not trading this with real money. I'm not giving you signals here. This is after the fact. These trades have already occurred. They are still open positions, but you wouldn't want to get into these trades now, so I'm not giving you signals, so definitely don't do that. Uh, and you can see here NZD CAD is currently down, and the other two trades, NZD JPY and USD JPY, are in profit. Total profit right now about $580.81. And we're going to hold these trades over the weekend. Now, we don't normally do that when we're trading on the lower time frames, like the 15-minute, the 5, or the 1 minute, or we're using our community strategies with the impulse scanner. We don't hold trades over the weekend in those situations. But since this is a higher time frame strategy, we can decide to hold trades over the weekend if we want to. And so that's what we're doing with these. So let's look at NZD catch first here. I want to try to show you what's going on there. Remember the strategy. You go to the 4 hour time frame and you're looking at the moving averages, right? The 50 is the aqua, the gray is the 200, and the blue is the 800. So price at the time of this setting up here, you could see our demand zone that we have highlighted here. And again, we're using our Smart Money Concepts indicator to find those zones, right? Okay, so you could see here that um, price comes into the zone here. Okay, the moving averages, right? Price was above the 800 and the 50 is above the 200. That makes it bullish, right? All the rules for those are in the video and in the description area of the videos as well. I also have a PDF file that you can look at as well. Let me know if you want the link to that. I should have pulled that up for you here, but I just want to get through these three trades here. So here's where we were at here. Price came down into our 4 hour zone, right? At that point, we dropped down to the 1 hour time frame here. Now, price does go through our zone slightly, a couple times here, okay? And then what happens here, right over here, we get a change of character, okay? And you can see here, let me just show you real fast here. You get this low right here, moves up. We didn't really like this change of character here, okay, because this would have been the high that would need to be broken. But then once price does move lower here, that makes this high right here valid. Okay, so we get that break of structure, we get the change of character to the upside here, right? And at that point, what do? Right? We take out our fib tool. Now we also want to turn on our indicator just to see we do have a 1 hour refined zone right here that we could trade from. We get that because we got a change of character. Now, the other way we could take a trade is with a buy or sell shift, right? We did not do that with this particular pair. We waited for the change of character. It's always best to wait for both, right? You want to see that that buy or sell shift first, and then you want to wait for that change of character. Okay. And so that's what we did here in this instance. We get a buy shift here, but then it comes back down. We get another one, it comes back down, then we get another one. Then finally we get the change of character. That's why most times it's best to wait for both of them. Okay, so in this one, we get the change of character. Now what we're going to do is we're going to draw our fib from this low up to this high, right? And then what happens is now we need this is something that's really important. You don't need to set your limit order until you get a pullback to this 38.2 here. Okay, so let me just play this forward for you for a second. Boom. Right there, you see we get the pullback to the 38.2. So once that happens, that's a valid pullback. So that validates this zone here. Because sometimes what happens, this price just keeps going higher, right? And so you have to keep adjusting your fib. So you don't want to actually set any limit orders until you get a valid pullback, which comes back at least to the 38.2. Now you could say to yourself, okay, we could look to take this trade, right? If we take it at the 61, we mark it right here. Okay, now if we go up to the 4 hour, what are we looking for? We know this is our 4 hour zone here. So we have to pull our stop loss right down below that zone. And then we're looking for the next, since this is a buy, we're looking for the next supply zone. That's where our take profit's going to be. So this ended up being like a 1 to 4.33 risk to reward ratio trade if it works out well. Now we go back to the 1 hour. Okay. And now what we could do is we look and we see at the 61.8, we have at least a 1 to 2 risk to reward, right? This one's actually a 1 to 4.33. So as long as we have at least a 1 to 2 risk to reward at that 61.8 level, that's where we could take the trade. Okay. So this way, we don't have a situation where price comes back, to the 61.8, but we don't have our limit order set there, and then it takes off to the upside. Okay. So this is how we set this trade up at the 61.8. Okay. So again, we're taking the trade on the 1 hour. We identified our zones here. We could get in at the 61.8. We can get in at the 71. That makes it a 1 to 5.99, or we can get in at the 1 hour refined zone, which makes it a 1 to 8.92. Again, as long as we have at least a 1 to 2, we can get in at the 61.8. Okay, so let's see what happens with this. We see, boom, we get into the trade, right? Price actually comes all the way down to the refined 1 hour zone. Okay, all the way down. So if you get in down here, you can get a better risk to reward on the trade, right? But the downside to that is it might stop at the 61.8 and take off to the upside, and you don't even get in the trade. Okay, so then what happens is this kind of just moves around here. It goes into profit, then it comes back down, and then it kind of finishes the day down, like we showed you on our demo account. So our next one's NZDJPY. And so again, on the 4 hour time frame, the rules are you look at these three moving averages, price is below the 800, right? And the 50 is below the 200. So this is a bearish trend bias on the 4 hour time frame. Okay, so we're looking for sales. We've identified our order block right here. The indicator, will show us where our order block's at. Okay, now this order block gets hit right here. And so at that point, we drop down to the 1 hour. Okay. Now it's an order block, but it's also the 4 hour supply zone, right? So an order block could, if an order block is for a sell, then it's a supply zone. If it's for a buy, then it's for a demand zone. Okay. So right here, we get a change of character. Okay, the first thing we get is we get that sell shift right here where the yellow EMA crosses and closes below the red. Okay, but then we get the change of character right here. So that tells us that we can go ahead and we want to draw a fib from here down to here. Okay, and then we want to move this forward here. Price comes back to that 38.2. That tells us now what? We could have looked to take a trade, but we weren't looking at it at this time. So we let this pass us by. Okay. So let's just let that pass us by. And what happens is price keeps moving downward. It wouldn't have hit the 61.8. Okay. And price just keeps moving down. Takes a while to get down. Okay. So now what are we going to do? We're going to draw our fib, right? This was the high right before the change of character. So we're going to use this high right here for our fib, right? And then we're going to wait for price to get back to at least that 38.2 set part, right? It gets there. And so now that tells us that we can set up our trade. Okay, so we're going to get our short tool and we're going to first put it on the 61.8. Then we're going to go up to the 4-hour, right? And we know that our stop loss, our invalidation zone has to go up above this 4-hour supply zone here, right? And then down here is our 4-hour demand zone that we're going to use for our take profit, okay? And that gives us a let's see here. I think what we did here, we took this up a little bit higher here. Okay, on NZD, this comes down to here. So that tells us what? Do we have at least a 1 to 2 risk to reward at the 61.8? Yes, we do. Now, if we didn't, then we would look to enter on the 71, which that would give us a 1 to 296, right? And then, of course, if that doesn't work, we would use this 1-hour supply zone right here to enter from, right? That would give us the best risk to reward, right, of 1 to 13.33. But chances are price may not come all the way back to there. So we want to give ourselves the best chance to get in this trade. That's at the 61.8, as long as we have at least a 1 to 2 risk to reward. As long as for every dollar we risk, we can at least get $2 back if price hits our take profit target. Okay. And that target is at the 4-hour demand zone down here, right? So if you're selling from a supply zone and you're using the next demand zone for your take profit or your profit target, right? So let's just go back down to the 1-hour here and let's see what happens with this trade. This trade took a while to develop for sure here. So let's just play this forward for you here. You see price comes up, comes down. This one took a while to develop, right? And then right there, right? Price went up and it got us into the trade, right? It hit that 61.8, right? And so that got us into this trade. Okay, then price goes back up. It actually hits the 71, right? And then it starts moving back down again. It goes back up again, goes back up again. It just misses our refined 1-hour supply zone up there. And then it goes down and it finishes the day right now. Like I said, we're holding it over the weekend. It finished in profit right here. So that's what NZD looked like. Okay, I got one more to show you here. And now in USD JPY, this is what we were looking at on 4-hour time frame. Price was just looking at the chart, you could see it's in a downtrend. But again, if you use the 3 EMAs, right? Price is below the 800, that's the blue, and the 50, which is the aqua, is below the 200, which is the gray. So that tells us that the trend bias on the 4-hour time frame is bearish. So we're looking for sales. So it identified the indicator, our Lux Algo Smart Money Concepts indicator identified this supply zone right here. And you can see price comes back into that supply zone, right? You can see there how it highlights it. So you could see it identified that one. It also identified this one up here above it, right? And also another one further up. It also identified these two demand zones, okay? We're not going to use them right now because we're looking to sell, but we will use these demand zones for what? For our profit target, right? If we decide to take a trade. So let's just shut that off for right now. And so let's look at this on the 1-hour time frame. Now, on USDJPY, remember our two entry models are, one is the buy or sell shift. That's where we get a good move in the direction we want to go. The 5 EMA, which is the yellow line, crosses and closes below the 13, which is red. Okay, that's one entry model. The other one is the change of character, where you get a actual break of structure, an internal break of structure to the downside here before looking to take the trade. We want to do that because price is trending up here into the zone, right? So on this one, we got a pretty good move down. It didn't break this low here, so you didn't get a change of character. But I looked at it and I said, hey, that's a pretty good move down. The 5 EMA, the 13 there's a pretty good gap there between that and the red EMA, right? So what I did at this point was I drew the fib from here to here. Okay. And then the first thing I want to do, right? My hand's up. My hand goes numb when I have it up here on the mouse pad too long here. So the first thing we want to do is we want to wait for price to move back to that 38.2 to make sure that this range is set for us, right? We don't want to put a limit order in and then have price continue moving downwards, and then we have to keep adjusting our fib, right, as it moves down. So let's see what happens here. Price immediately moves up, showing us that yes. And then you can see here what happens is on this candle here, price actually hits the 61.8. But let's just see what would happen here. We're going to get our, if we would enter at the 61.8, right? Let's go back up to the 4-hour, right? Our stop loss has to go. Our invalidation zone is outside of our supply zone there. And let's turn our indicator on, and then our profit target would be at the beginning of this 4-hour demand zone right here. See, the indicator is doing all the work for you guys. This strategy is almost damn near 100% objective. The only subjective part is deciding if your entry, if you want to use the buy or sell shift or the change of character or both. That's really the only subjective part. The strategy is 100%, almost damn near 100% objective because we're using the indicator to identify all this stuff for us, right? We're using the moving averages to identify the trend bias, and we're using the indicator to identify our supply and demand zones for looking to enter and also take profits, right? So this is what we're set up at. This is a 1 to 1.87 risk to reward ratio trade. So that's not enough, right, guys? So that means we have to look at entering this on the 71 instead. Okay, and if we do that, we have a 1 to 2.39 risk to reward ratio on this trade. So we know we can't enter this on the 61.8. We have to enter on the 71. What happens is on this candle right here, this impulsive candle to the upside, price would have gotten us in if we had our limit order at the 61.8 and also if we had it at 71. So at this point here, we are in this trade. Okay, so let's drop back down to the 1 hour, right? And so what you see here is, wait, we have this drawn wrong here. I'm sorry, guys. No, we have it drawn right. It's drawn down to there. So we take the trade on the 1 hour time frame, and the 1 hour, as you could see here, price has not come back to the 71 yet. Okay. So now we know that we have to get in at the 71 because at the 71, that gives us a 1 to 2.39 risk to reward, right? If we entered at the 61.8, we only had a 1 to 1 point, what was it? 1 to 1.9 or 1 to 1.87. So we have to get in at the 71. Now, because we're using just the sell shift for this, we don't have a 1 hour, a refined 1 hour zone that we can get in from. However, if we turn this indicator on, right, we see that there is a 1 hour zone up here that just goes further back. See? So that actually is a valid zone, and it is also inside of our invalidation zone, which is good. Okay. So let's see what happens on this trade. Boom. Price gets us into the trade right there. Okay. Now it starts moving in our direction, and then it starts moving back up. Right. This also goes up and down for a little while. Boom. It goes all the way up to that 1 hour zone. You see that? All the way up to that 1 hour zone. And then from there, it starts moving back down. And then towards the end of the day, it makes a stronger move to the downside, and that's where it ends up. So those are the three trades from this week, guys. USD JPY, NZD JPY, and NZD CAD. Okay. We're holding all three over the weekend. So at some point next week, once those trades close and they hit the take profit or they hit the invalidation zone and we lose on them, I will make a quick video showing you that, okay? Because I don't want to make you wait until all the way to the end of next week when we do the next weekly recap, and then I have too many pairs to go over, right? So since we're holding these three trades over the weekend, once they do close for us next week, I will make a video showing you what happens there. But this is the weekly recap, guys, for the week of March 24th. 2025 using the 4 hour supply and demand zone trading, right? And guys, if you want the PDF file that gives you all the rules for this, if you want the link to both my 4 hour supply and demand zone trading as well as my 1 hour entry model video, then please just send me a message, comment on this video. If you like this video, make sure that you subscribe to the channel so you get the updates that I'm telling you about. Make sure you like the video. And also, if you could put a comment down below saying what you like best about the video, or just put a 100 there, or just ask any questions there, or tell me that you need me to send you the links to the other YouTube videos, the 4 hour supply and demand zone trading, as well as the 1 hour entry models, and also the PDF file that gives you all the rules in written form. Okay, guys, have a great weekend. We got this done early here on Friday night, so have a good weekend and stay safe.